Yeah! Yeah! Turn me up! You guys ready to go? Kumatelli-vu, how are you? We have about 30 seconds, I think. All right, so let's get on with it. Yo, 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 yo. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of trade planning. Let me remind you that planning trades and trading plans is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small. Stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, my name is Wayne. I'm a currency trader just like you. I love trading. I love investing. I love doing the fundamental analysis, and I love doing the trading. I like doing the trades, and the trader psychology aspect of doing all of that is always interesting. So, been doing this journey almost 20 years, and it's still incredibly fascinating. So thank you for being here every day, and thank you for giving me a reason to stay razor sharp every single day, because ultimately it's a competitive advantage for me. So you are good. We make the Forex trading world at least a slight better place. So thank you for being here. Ask questions, get involved, let me know how I can help, and I will do my best. I've been doing these live streams for close to 20 years. That's longer than YouTube's even been around. So that's kind of interesting, right? So every day since 2004, I think it was. Every day since June 2004, I've been meeting with Forex traders and going over the live markets with them. Again, the idea of using trade planning as a form of education. Cool. So I've learned a few things. I've seen a few things. This recession ain't my first recession. Okay. So anyways, if it's yours, we can talk about it and I can share my learning experience. I'm not the greatest trader in the world, but I try. So other resources besides these live streams, in the description below, there's a link to free training videos on YouTube. Right? There's probably, I think it was 6,000 videos associated with my work on YouTube. That's youtube.com/FXBootcamp, youtube.com/TradersWay, youtube.com/Forex.Today. That's a lot of stuff. Also, you'll find a lot of stuff at youtube.com/FXStreet. I've been doing presentations there for a long time. And tomorrow I'm doing Trade Non-Farm Payrolls live for almost the 200th month in a row. I think it's 195 months in a row that I've done that webinar. 195 months. Add that up. Okay? If you were born that day, you drive cars now. Imagine that. The first day that I did that FX Street webinar, if you were born that day, you know how to drive a car and have been licensed by your government to be able to drive. I think that's pretty amazing. That's a pretty consistent, record, I would say. So anyways, also in the description below, a link to my book on Amazon.com, Strategic and Tactical Forex Trading. So if that's your modality, you like to read, it's not a bad book. What else? Oh, a link to FX Bootcamp is down there. Now that's premium, dude. That's premium. That's top shelf stuff. It costs $88 a year for 65 hours. Pretty soon I'm going to have to say 75 hours because I'm in the midst of doing oil trading course. So next year that oil trading course will be added next year, and that will push it probably closer to 80 hours. So definitely raise prices. Cool. And what else? A link to tradersway.com, a trustworthy, ethical foreign exchange broker with fast execution speeds, narrow spreads, huge swaps, world-class customer service, above average good-looking employees, and with my recommendation. They earned my loyalty and respect when the Swiss National Bank pulled the plug on their peg to the euro. Multiple ginormous foreign exchange brokers went out of business that day. And apparently they were trading against their clients. Trader's Way wasn't. Trader's Way was not adversely affected. And I'm like, oh my gourd. Oh my gourd. Becky, you are a good foreign exchange brokerage firm. And that was that. Not an ad, but their actions. Not an advertisement. And their actions earn my loyalty and respect. Tradersway.com. Here he is. First thing I want to cover today is the meeting minutes. Okay. I'll post this. Pachow. Pachow. Have you read the meeting minutes? Okay. You were supposed to do this yesterday. Make sure you go through and read, and it'll tell you what they discussed and what they're concerned about and whether they're going to raise 50 or 75, not at all, maybe 1%. But you're supposed to be doing that type of analysis. Second thing, jobless claims came out not long ago. Half an hour ago, 10 minutes ago, half an hour ago, 40 minutes ago. Okay, and interesting. Okay. Look at the trend. Huh? What do you think about that? Let me make this a little narrow. Since April, that's the trend. These are people looking for jobs. Should we be concerned? Well, if you read the meeting minutes, the Fed has decided inflation's more important than jobs. To bring down inflation, people are going to have to lose jobs. So part of the research you should be doing is, to what point? What unemployment level is natural? See, if we're overshooting on employment, and we're fully employed, then wages will go up. So for wages to stop going up, we have to get back to a neutral, or natural is what it's called in employment, the natural rate of unemployment. So people are going to have to lose jobs. And what you should be doing as a foreign exchange trader is like, how many jobs need to be lost before it does become a problem to the Fed? Okay. So now Luis says, well, inflation is starting to come down. You're right. But this is a major component of that. We have CPI needs to be watched. PCE is more important. But when you look at CPI, you want to look at the subcomponents and kind of just say, well, where is the inflation and where is inflation decreasing? But a key part of the idea of inflation are wages. So if people are losing jobs, they might accept a lower paying job if they need it. The thing is, there's too many people not looking for jobs. And did you guys follow JOLTS yesterday? I teach this in the macroeconomics course. You guys follow that? Okay. There's 11 million jobs open right now. You want a job? Go get one. 11 million. See? So why is it that we have a lot of people without work? Now you say, well, hey, we're at 3.5% unemployment. That's fully employed. Yeah, well, we have a lot of people not in the labor force. What the hell's the problem? These jobs are high-paying jobs. These are $300,000, $400,000, $500,000 a year job. How come people don't do it? Oh, well, you have to know machine learning to get these types of jobs. Yeah, well, learn it. Go online. You can learn it online. edX, Udemy. Go to a community college. Oh, well, it's hard. It's difficult. Well, yeah. So anyways, it's interesting. Like, this is the problem in the United States right now. We're a leader, and Americans love to talk about how all the intellectual property in the world starts in the United States, and we just pay poor countries to build it for us. But we do the hard work, the real value is created here in America, and then we just have it built somewhere else, and that's the easy job. Well, right now, this is a big red flag, and this is something I studied at Harvard. There's this disconnect where there are lots of awesome jobs in America, but nobody's qualified to do them. Well, we've had a shortage of engineers in universities and shortage of math students in universities for a very long time. Hey, but you want a lawyer? America's great. We got lots of lawyers, right? Like, but oh my God. Okay. So who's got that kind of education? IIT? Yeah. It's really amazing. I have many friends. I'll say right off the bat, I can think of 3 friends that went to IIT in India, Indian Institute of Technology. Okay. 4 friends. I guess 4 friends that went to IIT. They came to the United States of America as immigrants. Okay. 3 of the 4 were in high tech. 1 of the 4 was an investment banker, and they're all self-made millionaires now. And I don't think they work. Like, they're done. Like 10, 15, 20, 30, 40, 50 million in the bank. Love this country. America, I love this country. This is where you can make it happen. And this just shows you there are lots of amazing jobs, but for some reason, we're not filling them. It's really too bad. Think of it as that is wasted wealth. That's inefficiency, don't you think? These jobs are going to go somewhere else, and those people are going to make money instead of having the jobs here, right? So when somebody says, we'll pay for your student loans, I'm like, well, they were student loans. You got to be careful because now you create a moral hazard. But if somebody else said, higher education in the United States is going to be paid for by the government. So I was thinking about this, like, let's say a network of community colleges, right? But most importantly, an online community college funded by the government with some sort of requirements to actually do the work. But wouldn't it be great if higher education in America was free? I mean, I think it's practically free now online. It's unbelievable. Okay? Okay? Like the difference, like the oil trading course. Much of it I learned at Harvard. I'm charging $250 for a course that I paid like $7,000 for. And you're like, online's awesome, right? I didn't even I didn't have to build a campus, I guess. But it'd be really interesting if we could solve this problem. Just say, look, you don't live in a great neighborhood. You don't come from a family with high education. You're the first one to go to university. You don't have a lot of money. Oh, that's cool. Don't worry about it. America will take care of you because we want to build an army of entrepreneurs. Okay? An army of at least 11,250,000 entrepreneurs. You know what I mean? This is huge, I think. So pay attention to that. So people are starting to lose lose their jobs, and yet companies are still desperate. Okay? Desperate. By the way, 10,000 pilots are needed in the United States right now to work for the airlines. Right now. Today. Interesting, right? So, the airlines are like, man, we're desperate. We need more pilots. They're canceling flights. Like thousands of flights every day are canceled. There's just not enough pilots. And I'm like, one thing I don't like about the airline industry is they do things like seniority and unions and all this kind of stuff, and it's very anti-capitalist. So you get to a point where they're like, we don't know what to do. We need 10,000 pilots. We need 10,000 air controllers. You know, there's 20,000 jobs, not including any service and baggage and all that kind of stuff, and airports, just pilots and air traffic controllers. 20,000 people can get hired today if they're qualified, and they're good paying jobs. Okay? There's pilots that live all around me. They live in 10,000 square foot houses. They go on giant vacation. They own a beach house or a lake house. They live good lives, man. So isn't it interesting? Like, shouldn't Delta just say, hey, if you fly for Delta, we will pay for your $100,000 loans that you took out to get trained. We'll give you a $100,000 bonus. Sign up today. How much does Delta or American Airlines lose every day because of canceled flights? Huh? It's pretty amazing, right? What happened to the previous pilots? Yeah, well, there's turnover, right? But the weird thing about the airline industry, and like I said, I know a lot of pilots, you get hired, and whoever happens to be hiring that day, you sign up, and you have to be with them for the rest of your career. It's really weird. So 15 years later, you'd rather work for another airline because you want the opportunity to fly from Atlanta to Rio de Janeiro and back on your 777. You're like, dude, that's a great flight. I'm getting sick of flying from Miami, Florida to Miami, Ohio and back. You're like, I hate these little dog legs, right? So you're like, I want the big jumps, right? I want the puddle jumps. I want to spend the night in Rio and fly home, right? That's the one I want. But if I leave my current airline and go work for a newer airline, I lose all my seniority. So I'm going to stay with the inefficient, unhappy job because I can't afford to start over at a new airline. And to me, that's just so stupid and bizarre. Stupid and bizarre. Can you imagine, right? Working for a company and you're like, I could get a better job, but I can't take it. Like, so dumb. So the airline industry, that needs to be cleaned up. But things like, why don't you just give people a $100,000 bonus to work for you, and they can put it toward their education? Find a way to get the education free. This shows us that education in America is too expensive. Okay? Did you know Harvard isn't any more expensive than most other schools? Even medium tier schools, not even top tier. I'm not talking about compared to Yale. No, compared to like normal high-end education, like University of Georgia is not cheaper than Harvard. Why is that? Harvard loses something like $33,000 a year per student because it's amazing. And 2/3 of Harvard students are on student loans. It's not a school of rich, arrogant a-holes. It's pretty interesting. But Harvard is basically overinvesting. Okay? On your first day at Harvard, they assign your personal librarian so that you can access the resources there. So just imagine things like that, right? So what this is saying is there is an education problem in the United States, and it needs to be fixed, and it needs to be fixed fast. Huh? There's so many industries where this might be important. I was discussing, having a conversation with an executive from a logistics and transportation company, aka a trucking company. They have drivers, they have warehouses, all that kind of stuff. Truck drivers that they have, right? This is not like some statistic I pulled off a database. They are paying their truck drivers between $250,000 to $400,000 a year. And they can't find enough truck drivers. How many people would be happy with $300,000 a year and an opportunity to see the world? How many people would take that job? Dude, what a great retirement job that would be, huh? Huh? Anyone want to make $300,000 a year? You're going to have to drive from Seattle to Atlanta. And then you got to zip over to Dallas and then go to Akron, Ohio. Yeah, it's not average, but they have to. Right now is what's happening, Jean-Guy. I can tell you that's above average, but that's my point. That's my point. This number here is so staggering that a company has to pay a truck driver $300,000 a year. I'm not picking on truck drivers. I'm picking on the industry that obviously the world is desperate for truck drivers. Desperate. Okay? So whether you drive a truck on a road or drive a truck in the sky, they make about the same amount of money right now. Isn't that interesting? A flying truck or a ground truck? Not bad. Okay, so anyways, interesting stuff going on in the world. No June? What? No June? Shouldn't this be June? Am I missing something? Did it not come out today? Sorry, I guess not. So what else? We had the FOMC meeting minutes yesterday. ADP, oh, it's not here either. Let me refresh. Did it not come out today? Highlander says, how much of that $300K is spent on gas? I don't know who pays for the fuel. I don't. I would expect that that's a corporate expense, but honestly, I don't know how that business works. They canceled it. Interesting. All right. Interesting. All right. Cool. What else? So the initial jobless claims. Look at the, right? Look at, we were at 231. Now we're 235. Like I said. Was that right, Henry? Thank you, guys. I'm just in routine, you know. So, all right. Initial jobless claims, not a big deal, but it is, like I showed you already, it's been a trend since April. A little higher, a little higher. So, no, some idiot thought it would be lower. And I'm like, why? You ever wonder that? Like, what the hell is this all about? Why would it be lower if we're in like a 12-week trend and some idiot says, no, it's going to be way lower. No, it'll be on trend. I mean, again, it's strange to me. And then tomorrow, hey, NFP, Kitty Cat and jobs report, Kitty Cat CPI, So you should probably get your cat on today. Maybe do some front running. We had some bounce, some trade data. Let me pull it up under low, I guess. Tuesday, Wednesday, Thursday. Challenger is important. You want to add that to your non-farm payrolls. So again, I wrote an article, big, long, detailed article at FX Street on how to build a model and trade non-farm payrolls. And one of the pieces of alpha that I added that nobody was doing, nobody had even heard of this. Okay, I add that to my model. Okay, so anyways. CAD import export trade balance. Okay. Trade balance. Okay, the bigger the number, the lower the number, the better. And so this is concerning for me because this shows a sideways market. See, I want a negative number normally, because that means we're importing foreign goods at a higher rate than we're exporting American goods. Now you're like, well, isn't that a problem? No, it's not a problem. It's amazing how people like make this a problem. And I'm like, no. Okay. So I think one of the reasons we have inflation is we're not exporting the inflation like we normally do. So tell me, let's go back, I don't know, 5 years ago. Did the United States have inflation? No. Who had inflation? Right? Emerging markets. Where did it come from? Mature markets were buying products and services from emerging markets. It lowered prices in the mature countries because we got lower prices. Therefore, for mature economies, right, that's deflationary. And all of a sudden, all the money was going to emerging markets, which is inflationary. So lower prices and money. So you could think of it as Europe and the United States and Canada and Australia had low levels of inflation because they were exporting their inflation. Now, places like Australia will quickly get inflation higher than other countries, well, because they're an exporter as well. So they get more money coming in. Therefore, their interest rates are typically higher. So I look at this, and what does it tell me? It's not deflationary. Normally, it would be. I mean, it's not in. How should we say it? We need to import more. And the big question is, why are we not buying BMWs? Why are we not buying Samsung phones? Okay. Is it because there's none available to buy? Okay, supply side. Or is it because we don't have any money, we're losing our job, or we're worried about losing your job? Okay, even just the psychology of it will change a consumer's behavior. And what I want to see in a normal, healthy world is this actually falling. I want to see the trade balance get worse because worse is better. Okay, this little thing here, bad. Down is good. Okay, now down typically means weak dollar. Why does down mean weak dollar? Well, what do we use to pay for the products and services we're buying from foreigners? So if this is dropping, we're buying more stuff from foreigners than foreigners are buying from us. So if we're buying more stuff from foreigners, we're sending money out of the United States. We're selling our currency to buy products and services. So if this is flat, we're not selling our currency. Okay. And when we're selling our currency, it's a good thing because we want to spend. I guess we don't really like spending when, the stock market's down 25%. Huh? Yeah, I feel you. I really do. So something to watch. Okay. Now, did you guys did you look at trade balance today? If I hadn't brought it up, would you have looked at it? You did? Frank says no. I would suspect probably not, right? You did already. Well, that's really good. How about the jolts? Once again, people thought jobs would be lost. This is people canceling open jobs, probably not filling. And yet, yeah, there's a little less than there used to be, but there's still a lot. Okay. Okay, now, moving on. Oil's going to move today. Oil's going to move today. Oh, you click the thumbs up because of the trade balance? Well, thank you very much. It's like putting 50 cents into my G-string. 2 bits. Oil's already moving. Yeah, of course. Why? Okay. Why? Because they're playing it. Okay. So it's like kind of what we were talking about on the different time frame. Okay. Once you get the higher high, you can buy the higher low. Now it's a higher high. So now you got to buy a higher low. Okay. Okay. So it all depends on when you want to get involved. Okay, bang, 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 bang. Okay, there's all kinds of things going here. There's a multi-time frame here. So the scalpers are buying this. It's the same thing. If higher high, then higher low. Okay, so you get a bottom first. Then on the micro, which is like, let's say a 5-minute chart, you get the higher high, so you buy the higher low. Then you zip over to this 15-minute chart. Okay, now you're doing the exact same thing. A higher high here sets up a higher low there, which sets up a higher high here, which sets a higher low there, which sets a higher high here, which just simply sets a higher low there. Okay. Remember yesterday I was talking about first opportunity is aggressive, but the upside is you could have a really close stop. And the second one was wait for the higher high. High low. Okay. So there's a standard operating procedure. By the way, this green zone we call the bullish buying zone. The 2 best prices, okay, are these prices. Only from a bullish point of view. I don't have this set up as a bear. Okay? So look, now you should be on tomorrow. You should be prepared for tomorrow. We're done today. Okay? Cool. Cool. And that's something I'm going to teach you. The timing of trading oil is important. The timing. That's one of the things I'm going to cover in the oil trading course. How many people here enjoyed the first lecture of the oil trading course last night? It was 90 minutes. "90 minutes. And then I stayed another 20 minutes or 30 minutes after the recording was done just to answer questions. Come on, I'm an only child. I love to be showered with affection. Thing about having an ego is it can easily get shattered. Yeah, I go open my mind completely about energy. Cool, man. Oh, even answering the questions were awesome. Cool. Yeah. Awesome. Great. Thank you. So I'm already done the second one. We're 90% done the third one. So I'm going to kind of wrap up the third one, and I'm doing a deep dive now in seismology, and then to teach you seismology and the different techniques. So if you're standing on the ground and you're pretty sure, because of the geology that you're surrounded by, so you're standing in the desert, or you're standing in the middle of Texas or wherever, in the middle of South Dakota, and you're in a field, and you're like, from what I can tell, 5 miles below my feet, I think there's oil. Well, how the hell do you confirm that? So imagine, guys, you're standing there in this field, and you say, 5 miles below my feet, there's oil. Now, the cost of drilling one hole in the ground is going to cost you about $4 million. You kind of want to be sure you're right. Isn't it fascinating? The different types we confirm before you start drilling. Isn't that just like, if you think about it? Okay? Amazing, huh? Truly amazing. Truly amazing. So that's my WTI. La-di-da-di-da-di-da. Got to move my euro closer. La-di-da-di-da. You trading any of these dollar pairs? Could be a great opportunity later today. 55 says be careful, but that's okay. Well, I don't really think the United States exports fuel. Okay. But it could export raw crude and raw natural gas. Okay. Sure. The issue has to do with who buys it. Okay. And what product they need to make. So, oil that's fracked, depending on what comes out of the ground, may not be able to be refined here. So you'll sell it to somebody else that can refine it. Okay. Aussie dollar. Yeah, well, we have Aussie dollar here. Okay, so I'm on alert. I want to watch these lines in the sand. So I call this the AO, the area of opportunity. Makes me want to play Call of Duty. I haven't played Call of Duty in, gee whiz, 5 years? I used to play Call of Duty, and then it just got easier and easier every year. I'm like, I want open world. So anyways, yeah. So when I get into an AO, okay, let me mark this one as well, a little shallower, but about the same. La 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 la. La 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 la. Okay. Then you want to drop into a smaller time frame, maybe an hour, maybe a 15, and you start your technical analysis. Is this a lower low? Not yet. Okay. So if this had made a lower low, let me make this a little thicker. If it had made a lower low, then I could set up a lower high, lower low scenario. It did not. They're still slightly bullish. But the next opportunity for me as a bear would be to maybe sell on this line. We call that a roll reversal. Or sell up here on that line, which we call a double top. Now, you could replace roll reversal. Roll reversal is a place to look for a lower high. So I know I'm a bear. Bears only sell double tops or lower highs. That's it. So my job today is like, yeah, maybe 68.5. I might tear this down. But it's going up. Yeah. See, if I'm a bear, I sell green candles. Oh, it's going up. Good. I want to sell it. Makes me feel really good. Huh? If I've taught you anything, it's that. Now, notice I'm not on this trade anymore. So when it popped up, it got knocked out. What did I lock in yesterday? 300 pips? So now I want to re-enter into the same trade. And you're like, well, what? Why would you do that? Why would you get out if you think it's going to fall again? Well, I locked in a profit right around there. And of course, I could be wrong and it does this. Well, I'm not giving back the 300 pips. God dang it. What's wrong with you, boy? Okay. So, yeah. So, all right. And so now, if it does this, yeah, I'll get back in. That's cool. But I don't like higher highs. You see? Higher highs. I don't like higher highs. So I got out down here. Why? I don't like higher highs. So what am I waiting for now? Lower high. Easy. Okay. Richard's a bull. Yeah. Trading a triple bottom. That's exactly why I decided to get out of here. Because Richard could be right. And we have this going on. Okay. Is this related to potentially interest rate hikes in Australia? Yeah, for sure. Huh? You like $1.35? Okay. Okay. Could be. I'm worried because let's do this. Well, I can't see. Hang on. I'm going to move this out of the way. No wonder. Okay, world. Oh, that's not it. All these stupid Google ads. I think this one. So I covered this 1 week ago in the swing trading group. Where's the? I guess here. La 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 la. Oh yeah, it puts in. I clicked C, and then it puts in alphabetical order. Why don't you just take me to? So one of the things we did last week is we looked into this timeline. Okay. And I said, pay attention. And oh my God. Okay. We went from 23 to 37. And I think you're going to find tomorrow an even higher spike. And I'm thinking, ooh, this might be interesting. Where this might go to like, how would you feel if this went to 100,000 tomorrow? Where we go from 23, was it 23 or 33? That's 33 to 23 to 37 to like 100,000. Let's go to Bloomy. This is 2 days ago, so it's already behind. So it's not going to be. So that's only going to report what we already just looked at. 1 day ago, 1 day ago. It's too slow. We're already behind. Right? 2 days ago, 1 day ago, 4 hours ago. Chinese open. No, Chinese 12 hours ago. We'll try 12 hours ago. No, blocked. Anyways, it'd be interesting if in a day or two we find out massive spikes. And that would kill any bullishness in the Aussie, I think, potentially. Okay. But Richard, I'm not saying you're wrong on being a bull. No, absolutely not. I'm just stating the concerns and maybe the threats to your position. Okay, but right now, this is a very basic trade setup that you have, right? So you had this one earlier. So you have the triple bottom, great. Then you have the higher high. So let's just break it out. Higher high, higher low off of a 382, higher low. So that's perfect, great. Then you move this again to the new move. Okay. Again, it's not really a fib, but I'm just trying to show you that buying a dip puts you up here. Great. So that's working. Good. So the next logic is like, well, most likely this low will lead to that high. And the next move will look like this to this to this. Okay. And you just keep doing that. Perfectly acceptable, perfectly fine, 100% accurate. Okay? Unless you are a bear. Now, bears, and remember, bears and bulls, there's no right or wrong. It's just what direction you're going to set your trades up for. So a bear is going to look for here, and a bear is going to look for here. So I already know this to be true. Okay? So a bull's going to plan this, this, and this. Then a bear is going to try to take one of these down. And if you get a lower low, it's going to produce a lower high. That's all there is. There's no right or wrong. Okay? To a stoic, there's no right or wrong. There's just whatever's virtuous. It's either virtuous or not virtuous. There's no good or bad, right or wrong, degree of virtuousness. No. Okay? It's like disciplined. You're either disciplined or you're weak. There's no in between. So I always translate stuff like that like if you're in between being a bull or a bear, you're not going to succeed. That's it. I don't care if you're a bull or a bear. And if you have research and data to support your bullishness or bearishness, then it's virtuous. We can discuss it. I can understand it. I might disagree with it, but that doesn't matter. At least I can understand your point of view and appreciate it and say, oh, well, okay, yeah, you're right. Maybe the vaccine just rolls it out. Finally, China cures its COVID problem. Oh, right, great. And that'll do a lot of great things. Awesome. I don't think it's going to work and blah, blah, blah. So therefore, I'm going to do this other thing and I'm looking for this and I'm looking for that. There's no right or wrong. There's only beautiful happiness if you're a bull or a bear. And for those that are not bulls or bears, they're going to find inconsistency. Sometimes they're making money, sometimes they're losing money, and you're like, what the fuck? This is so my broker's trading against me. You're like, dude, come on. Okay? So I can tell you, bulls are buying, great, and bears are looking to sell. That's how the world works. So if it does this, at least on this time frame, probably bearish for the rest of the day, maybe the rest of the week, maybe the rest of the month, maybe the rest of the year, depending if you're a bull or a bear on Aussie and a bull and a bear on a dollar. Look, you could be bullish on both Aussie and dollar, then you shouldn't be trading this. Okay? Yes, we call that price action, Richard. Yeah. I think you need to know two things. One, like required. One, you have to know price action. I don't care what technique you use, but you need to know price action. I don't think you can trade if you don't understand the way the market moves. That's what price action is. And two, I like pivot points because they're a leading indicator. Okay, price action. Okay, price action is about price. Pivot points are basically market action. Or what if you took my course that I did, 15 years ago, right? I call it market forces. So everything I do, whether it's using moving averages, oscillators, okay, right? Price action or pivot points. What I'm doing with all of these, okay, I use different moving averages to separate market from price. I use different oscillators to separate market and price action and pivot points are separating market from price. So they're all different techniques, different algos, different points of view to do the same thing. Separate market from price. Okay? So price is rising right now. I spent a lot of time thinking about this right in the very beginning. Okay? And it came, it was right after, like one of my first days after I quit my job as a venture capitalist and I moved into my home office to do my career. My wife says to me, "So, how are the markets today?" I didn't know how to answer the question. I'm like, well, in a 15-minute chart, it was bearish, but on a 4-hour chart, it's bullish. It was interesting, right? I'm like, well, that really depends. And it made me think, well, what is the answer? How were the markets today? Then it occurred to me, the price can fall in a rising market. I think about it. The market is rising, but price has been falling for 2 hours. Well, if the market is generally rising, but right now price is falling, maybe that's the key. Maybe I need to buy when price is falling in a rising market. Interesting. I wonder how I can figure out when to buy. So I had to define a couple of things. What is the market? How do I measure the market? How do I define it technically? And then when do I know price is done diverging and will then converge back with the market? So I started with moving averages first. And then I found a photocopied book. It wasn't even a book. What do you call them? Seminar handouts. Okay. From the mid-1980s by a man named Gerald Appel. A-P-P-E-L. Does anybody know who Gerald Appel is? I found this because I was trying to separate market from price, and I'm like, I need something to tell me when price is either converging with the market or diverging from the market. So I'm like, is price converging with the market or diverging from the market? It's all right, Richard. I own a lot of that. So, okay. So who is Gerald Appel, and how did I discover this book, these printouts from the mid 1980s? Anybody want to guess? You are not alone. Oh, I see what's going on. There's a crazy lag. Oh my God, there's like a 1-minute lag on YouTube today. No wonder I ask questions and like no one responds. I'm like, oh my God. All right, well, I guess I'll sit here and wait. You're probably going to start answering now from what I can tell. How interesting. Yeah, the guy that Gerald Appel invented the MACD, the moving average convergence divergence. And in a weird way, I discovered it on my own, as almost everything. I discovered Fibonacci. I discovered probably even Elliott wave. But I was using moving averages to separate market and price. And I'm like, And then I found out there's actually an indicator that does it. So I thought that would be helpful. Okay. So then I did what probably everybody does. And I threw down a MACD. And I'm like, that's not helpful at all. I studied it for, I don't know, 3-4 months. And that's the weird MACD that comes with MT4. It's like the worst MACD ever invented. It's so stupid. Can't believe it's the default. Okay, that's a little more classic, so I'll get rid of this one. And so anyway, so I studied it and I'm like, this is stupid. Okay, so like things like this, okay, I looked at and I'm like, that's stupid. It's way too early. And then you get like this. And that's a little better. But sometimes they're not helpful. And then I'm like, but what is this? And what is that? And, you know, it was, I don't know. I didn't find it helpful. And I'm like, do I need this stuff? And then I realized it's using some other person's research. And I look at it, and you have to understand, I spent months and months and months and months. Oh, Chris, it should have been. I'll double check, Chris. I'll see what's up. Then I realized it's measuring 12.26.9. And I had spent months, and then later on years, analyzing moving averages on multiple time frames. The 1 minute, the 2 minute, the 3 minute, the 5 minute, the 15 minute, the 30 minute, the 1 hour, even the 2 hour I traded quite a bit, the 4 hour in the daily. And I'm like, these settings suck. I don't know who came up with these, but they're stupid in my humble opinion. So I'm like, well, what do I want to know? And I said, well, I want to see the divergence and convergence of the 2155 over the last 8 periods. Because those are the moving averages I use. And then look what happened. Okay? Oh, cool. That goes all the way through now. Cool. Look what happened. The accuracy went up. And all of a sudden, I'm like, snap, boop, boop, up, boop, boop, up. Okay. Look at this. Okay. Cool, man. Cool beans. Why 8 periods? Because I said so. Why? Because I looked at everything. And then I realized there wasn't much difference between 6, 7, 8, 9, and 10. And I said, well, why not use Fibonacci numbers? 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89. 144, 233, 366. Why not use a Fibonacci number? See, I used to use 2060. Okay? And I was meditating one morning, probably 2004, maybe 2005. I remember it clearly, meditating. And I'm like, why do my settings work? These are big questions. Why do my settings work? I'm trying to justify my success. Why do my trades work? Why do my settings work? Why am I finding success? Why? And then I'm like, I wonder if I've stumbled across Fibonacci ratios. Because when you look at my moving averages, there's a lot of math in it. If you suddenly want to get mathy, you're like, oh, well, the 4 hour and the 1 hour and the 15 minute, you're like, oh my God, he's doing something interesting here. Yeah. But so anyway, so I thought about it. Besides the math, I'm like, I wonder if I've just stumbled across some other force going on. Okay. And I thought, I wonder if it's Fibonacci ratios. So anyway, so I look at the sequence and I'm like, well, 20 is almost exactly a Fibonacci number, 21. And 60 is pretty close to 55. Would it really make a difference if I used a 60 EMA or a 55 EMA? And 55 would just make it a little bit more sensitive. So maybe that is gooder. I'm like, I wonder. And I changed it to 25, 55, and it didn't make a difference. But I'm like, I feel more comfortable that they're Fibonacci. Because maybe they're right. Maybe those that sell Fibonacci courses are correct. That it's all part of the universe. That if you look at a tortoise shell, or the skin of a pineapple, or that the way a tree grows its branches, or the petals of a flower, it's all Fibonacci. And I'm like, are you mental? Are you a gullible? Right? Really? You're going to believe that? Like, whatever, dude. Okay. But I'm like, it doesn't hurt to think that there's something. So anyway, so I changed it to 2155. It was great. So then I change, then later on, I'm like, well, I want MACD to tell me the information I want. Okay. Boris Johnson resigned. Dude, like 3 hours ago. Right? That's ancient, dude. And we knew he was going to resign like 6 or 7 hours ago. Yeah. Right? Rich was like, how come I'm not a CMT? That's funny. Well, I'll tell you one reason. When I first started trading, CMT people were laughed at and possibly would be rejected for jobs. So, honestly, I knew fund managers that managed about 300 million at that time. And they would laugh at me, like in my face, rude. And these were like friends. They were, I suppose, in a way, were trying to guide me. And they're like, you use technical analysis, right? I'm like, yeah. Charts for market timing. Yeah. And they're like, that's so stupid. I mean, they're like, oh my God, seriously. Right? And they would laugh. Right? So to become a chartered market technician, it'd be like at that time, if I wanted to work for a fund, they would kind of like, oh, I'm sorry, son. We don't use technical analysis. Is that right, Andrew? Thank you. No one's ever taught me, so that's really good. I can tell you that there are probably 3 people I can think of, including myself, so 2 others that taught pivot points, or probably still teach. Well, one of them isn't even in the business anymore. That taught pivot points. One of them, it was kind of scummy, and he's not in the business anymore. And the other guy I respect. But you know, in my walk through the world and the history of the world of Forex, you know, like I was at the very beginning of retail Forex. So I was a keynote speaker at the very first Forex Trading Expo, and you know, and all that kind of stuff. And I can tell you, I'd walk into these, you know, whether it was in Vegas or New York or other places, and I went to those places all the time as a speaker. I'd speak, probably 6 times a year at various places. And I was the only guy talking about pivot points. Back in the early days, nobody talked about pivot points. So it was just so maybe that's it. So I've been using them a while. That's all. And again, I'm using them because what we're talking about now is my MACD is telling me the market. Okay, so I can say the market is bearish. You see where how I came to be? This is like an origin story. I tell you, the Aussie dollar on the 4-hour is bearish. Now you might say, well, Wayne, price is rising. Well, that's not what I'm talking about. I didn't say anything about price. I said the market is bearish. And to me, it's a mathematical definition. Now, we have a divergence going on, which sets you up for profit taking. What this is telling me is bears have started to take profit. But this is not bullish yet. Could you buy that triple bottom? Yes. And you're trading the divergence, fine. But there's still, under these market conditions, a pretty high probability of continuation down. But price is rising. So this entire market will reverse and go back to the neutral zone at 69. It's actually about 70. So we're either going all the way back to 70, and you have a counter trend trade, and the target is 70. In which the market becomes neutral again, and that is not a sell zone. That's just neutrality. So Richard is long off the triple bottom, and I would say, okay, now you have a divergence trade. That's what Richard's doing. Okay, and that started a long time ago. So now he waited. Okay, double bottom, triple bottom, higher high, higher low. And so Richard would target this and then exit. Now, a bear would say, well, we kind of did this and now we're kind of flat. So probably in the next 24 hours, this is going to happen. Okay? Which one's right? I don't know. But you either set these trades up or you don't. Richard's like, yep, that really is my trade plan up to 70. Well, but see, that this is, you're confirming an important aspect of trading for everybody. You must understand the bulls and the bears. Once you get to that point, your trading will improve. Okay? You have to understand bulls and bears because there's only bullish trades and bearish trades. Everything else is just the mess in between, and it's probably mostly retail traders. Okay? Okay, we can check our aggression, right? Our aggression trade. Is the market bullish or bearish? Currently, it's risk on. So if this is happening, the stock market's probably rising. By the way, I'm thinking of changing the format of these webinars. Like, they're too long, aren't they? I apologize. So I'm going to start organizing them differently, but it'll take me a couple of weeks. Yeah. Oh, look. Stock market's going up. How did I know that? It's just how money works. It's only money, honey. I'll move the horizontal line. Do 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 do. Ba 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 ba. All right. So you kind of have this like little platform here where if it drops back down below that, you have a lower low, you want to stop being a bull. But if it's made a higher low, you want to be a bull. And you're like, but Wayne, what tells me if I should be a bull or a bear? Don't worry about it. Forget it. Stop trading. Well, is it the MACD that makes me bullish? Shh. Just stop trading. Okay. Dun, 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 dun. Okay. Ba, 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 ba. It's been a long, nothing lasts forever. So I'm gonna turn it right. I have S&P 500 up 0.88, 0.87. Dow up 0.5. NASI up 1.46. Still been a brutal first half. Even me buying on the way down, it's still been brutal. Nothing lasts forever. Brutal. Yeah. Brutal. Let's see what's going on. A quick look here. Oh, did I buy that? Oh, guess I bought some more of that. No. Nothing amazing to report. EVgo is up 12.5% today. Don't worry, because you're down on that one. But At least it's up 12% today. That's not bad. That's my best winner today. My biggest loser today is housing. Charge point is up 7%. Cool. Anyways, still quite mediocre. Cool. So, how would you feel if we got back above 4,000? Okay. Well, then we'd have a higher high. And that's all the difference in the world, right? Yeah, we did. Yeah, we covered oil. Hey, you're welcome, Richard. By the way, I collected all the tips that were given through YouTube. Whatever you call those. People donate like $5 or something. I collected all those and I bought a Magnum of Behringer Knights Valley Cabernet Sauvignon 2017. It's a Magnum, so it's a 1.5 liter bottle, and it's in the wine cellar. So I'm going to sit on that maybe another 10 years. So in 2032, maybe 2035, I'll open it up and enjoy it. So anyway, so thank you, Maida. Okay. I didn't buy cigars, I promise. Huh? Nice. Huh? Nice, nice, nice. Look at that. It's like a piano. It's beautiful. Pique, huh? Gorgeous. If you know your cigars, you're like, my gourd. You want to see the inside? I can't show you the cigars because that might be illegal. You ready? Now that is funny. Oh, that is funny. Yep, it's why you need to have a daughter in your life. Yeah, you got to make yourself one of those. They're pretty cool. You find stuff like that around the house. Yeah. So I guess we got to watch the market. I guess I got to watch oil. I want to watch some of the dollar pairs. Pound is up. That's so awesome. So I can sell it. Aussie's up. Great. Maybe I want to sell that too. That's how I want you to start thinking. I want you to start thinking like, oh, pound is up. Euro's up. Great. I want to sell it. Cool. I'm going to move my stop a little bit. Okay, stuff like that. It's going up. Good. Sell it. Oh, it's going down. Good. Buy it. Nothing lasts forever. Okay. What do you think? Is this a kill zone? You're like, Wayne, there's so much going on. I don't know what to do. Blah, 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 blah. Well, find something that helps you clarify. Okay. You might say something like, well, if I'm below this line, let me make that fatter. If I'm below, ooh, nice. If I'm below this line, I'm a bear. You could have a simple rule like that. Cool. So then what's the plan, Stan? You might say, I guess maybe I'll try this one. Henry's Boris is out. Yeah, once again, guys, we knew that. My God. At least U.S. time, we knew it like probably 3 o'clock in the morning, 4 o'clock in the morning. Then at 7:30 was the press conference, and he came out. But we already knew at 7:30 U.S. time, which is 12:30 in the U.K., the question was, would he try to be a caretaker prime minister? We weren't sure about that, but like, oh yeah, that's done and dusted. My God, what is it? 10 o'clock in the morning? Yeah, 5 hours ago. Yep, it's already been traded. Already been traded. Cool. So anyways, anywho, maybe something really simple like this will be most helpful. Okay, and maybe on this time frame, or even a smaller time frame, you're waiting for a change in trend. So remember, let's go back to this idea. Make it a little smaller. Oops. Delete. I want this to be white. So you might say, well, I want to sell this on a 4 hour, but I don't want to do it until the 5 minute is trading below its parity line, or its neutral line. So you're like, I want to see this, and then I'm selling it, and I'm going to sell it all day. Day after day after day after day after, or whatever, right? All day. And so you're on a 5 minute chart waiting. See, what I teach is that you make a decision on a higher time frame, and then you trade it on a lower time frame, right? So now you're sitting around sipping your coffee, your Nespresso. Ooh, the bouquet. Yes. Waiting. Okay? Waiting. Very often I'm watching TV, I'm doing other work, I'm doing fundamentals, and I watch this, and I'm just waiting. Okay? Waiting. So I'm doing my fundies, I'm reading reports, I'm like, oh, that's interesting. Have news going on. Okay, that's cool, that's interesting. And then I get a lower low, and I'm like, oh, good, now I got something to do. Boom. And if it doesn't happen, I'm like, well, good. I'll try the next one. So anyways, I'm going to pull the plug because I can tell the lag today is crazy. So anyway, so let me end with this. I'm doing the live swing trading group. Today at 4 p.m., we're going to set up trades for all of next week. Hopefully worth hundreds of pips each. Typically, we're going for 300 pip trades. Cool. If you want to join the group, it's awesome. Okay, it's $99 a month. If you'd prefer to, instead of meeting once a week, you'd rather meet 10 times a week, that's $199 a month. Twice as much gives you 500% more. So anyways, whatever. 10 times more, right? So whatever, FX Bootcamp is a great opportunity. Anyways, I'll leave you. I'll see you tonight at 4 p.m., swing traders. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. And thank you, YouTube. Cheers.